What is going on, guys? Welcome back. Commentary for you. As always, link down in the description if you want to get in on this type of fun. Robinhood link. I get a free stock. You get a free stock. You know, it's easy. It's fun. Anybody can show you investing when you're up 15, 20% in a year. Really, collapse 12.5% in a week and see how many people want to show you those numbers. You know, $650 plus in the last 7 days. It's not a lot of fun. But you know what? I feel like I built a portfolio for this. I feel like I put myself in position with good companies to rebound from this. And I'm not worried about the last 7 days. I'm worried about the next 7 years. And I feel like I've put myself in a position with dividend payers to at least weather this storm a little better. And the reason I say that is because with all the economic situations, I'm still getting paid my dividends. Now, these dividends may be the only thing that help me break even or keep me afloat or balance or level my profile for the next week, month, year, who knows how long. I also expect some of these companies may have to cut their dividend based on what happened, and I'm okay with that. I could understand that. But it's going to give me a time to reevaluate whether I want to keep these companies in my portfolio. You know, like Fastenal, do I want to keep them? Stag Industrial, do I want to keep a commercial REIT? Now, if I do, I've got a great opportunity here to dollar cost down. You see my average cost $31.05 right now. Their cost is $27.98. I could dollar cost my way down very quickly, very effectively. This is a monthly paying REIT, would help put money right back in my account, and that's kind of the tightrope you have to walk. Do I want a company like Stag that's going to pay me every week every month and give me money back? Or do I want a company like maybe Microsoft that can grow short term, probably faster than Stag will, and help push my growth and rebuild my portfolio's value? Take a look at Main Street Capital here. This is a company that, when I look at what happened in 2008, they survived it. Sure, they're down $5 a share right now from my average cost. But we go back to that dollar costing. I could get this down relatively cheaply now. I could count on monthly payments if they don't cut like they did in 2008 back what they're paying, which would be acceptable. But those are things that I have to take into consideration. Do I want to shrink my portfolio since I have to keep such a close eye on these companies? Is it smart to have 10, 15 companies when, according to Warren Buffett, you only need one? If you pick the right one, all you need is one, right? So to me, it's not really possible for me to do that because in order to get the dividend payouts I want from a company like, say, Microsoft, I don't have that initial capital to make that investment. But I understand that mindset. And to me, pushing through this and trying to learn from this is going to be critical in terms of dealing with if something like this ever happens again. This may be the worst economic downturn we've ever seen. However, at the same time, we have an economy that can bounce back relatively quickly. People talk about, the 1920 crash. Well, I bet the biggest company in 1920 is nowhere near one of the smallest companies today on the S&P 500. So that whole line of thinking doesn't make a lot of sense to me. What I will offer is a company like Main Street here that focuses on BDCs is probably going to stand to do very well now as we look at our local communities supporting their local economy better, because to be fair, a lot of people may not want to be purchasing things that come from overseas. I don't just mean, China. I mean anywhere overseas. They may want to support local growers. They may want to support local businesses and families because they're not going to be as concerned as a virus outbreak with things that are coming constantly from overseas. So that may be something that helps a company like Main Street. That may be something that helps a company like Stag grow and push. Meanwhile, you have a company like Fastenal that probably does quite a bit of business overseas. They may have a struggle with those suppliers as they've closed plants, as they've shut down production, as they have buyers that maybe come to them and say, listen, we want US-based tools and supplies. Those are things that I have to be ready to adapt to, understand, and adjust my portfolio to that, whether that's for the better or worse. So in my opinion, a lot of fear in the community, a lot of people acting drastically, understandably, for better or for worse, but it doesn't change where I am. Again, my focus is not 7 days ago. My focus is 17 years from now. And while we'll always probably remember and respect what took place here, I can't let this fear dominate my mindset today when in 20 years, this is probably going to be one of the furthest things I'll be thinking of. But I can take advantage of things now that can really set me up to be in a great place 17 years from now as long as I'm smart and watch what I'm doing. Microsoft is a great example. Look at some of the stocks. Amazon is a great example that you could get into relatively inexpensively now that could literally help your wealth grow for the next 2 decades. I know easy to think about short-term losses. Oh my God, look what's happening. This is horrible. But for every negative, there's a positive. And there's a lot of people that are going to take advantage of what's happening in the market and people's weaknesses and fears and profit tenfold from it just because they have a stable mindset and they're ready to take advantage of these things. So I'm going to keep putting money in the market. I'm going to let the market calm down over the weekend. I'm going to probably keep staying up till 2 in the morning, which is ridiculous when I have to be up at 7, watch the futures market, try to get a barometer of where things are going to go. And I'm going to make the best decisions for me, and I'll obviously be here to talk about them as I do it. Appreciate you guys checking this out. You know I will be back in the week with more commentary.